So have a good day, brother. Welcome you here to our mentorship program. So SLK Fasi, myself, and the trader Desmond. So who introduced to here. So this is our specially one-to-one mentorship program. It's only for those who are struggling in their trading journey. Still they need any help and still they need to find their edge. So this is specially made for them. Okay, so you are the one of the person in our one-to-one mentorship program. So welcome you here. We won't stop until you're going to be a profitable. Okay, we won't stop until you find your edge. So always we be here and we will be your part of your wins. Welcome you here. And after consulting your issues, we decided to take the topics for yourself. So this is the outline what we going to cover in upcoming classes. So these are the topics: the structure, basic and advanced, and the liquidity. It's the types and forms, and the understanding the key levels, the range cycle, and the single candle formation, building bias with liquidity and the key level, your one-to-one setup for life, your one setup, that the one setup entry model for your life, and then the mechanical approach to trading and the storylines and entry combined. Then after that, the last topic, the approaching the performs. So these are the topics we decided to cover you in our mentorship program. Okay. So hope you know that we're going to take a topic with the strategy of MSNR. So hope you know that the topic MSNR, Malaysian SNR strategy. So when we have simplified the topic, the MSNR, we called us like SLK, like structure, liquidity, and the key level. Okay, so these are the topics. We going to teach you MSNR simplified by SLK. We called as structure, liquidity, and key level. Understood? So this the thing, simplify the MSNR to understand you better ways, okay, and it will give you the massive results in your trading journey. So when you are watching my page, I will be taking and approaching myself into this SLK strategy, which is structure, liquidity, and the key level. Okay, so that will be helpful to you. You know that we in this structure we you have all idea about that. We have a two types of structure: the simple structure and advanced structure. So in simple structure, in the way you called us, this is your simple structure, right? Like we have a low and we have a higher high, and the low we have a higher high. So when we have a higher high in the bullish trend, so we call this the trend as bullish. Okay, so when you have a breakout, it made a new high. So this we called as a simple structure. It made a high and then low, and it made new higher high and then low. It made new higher high. Same like that, we will made a new lower low, right? So this is a simple structure, market structure. You will be learn this one by a some say or whatever. So what is a advanced market structure means? So advanced market structure, created for, so when you breaking the high, okay, when you made a new high, the price will reverse, right? The price will reverse. Then it will broke another high. Then it will reverse. Then it will broke another high. So whenever the new high was created, right? Whenever the new high was created, you must see the reversal, right? You must see the reversal. So in lower time frame, you know what the reversal do. This is higher time frame. So this in higher time frame, it will give you a reversal. So in lower time frame, you know what the reversal do. The reversal, you know, create a liquidity and attack the liquidity. So this is the concept of the advanced market structure. So advanced market structure, advanced market structure, what you know what to do? It create liquidity and attack the liquidity. So this is what the advanced market structure do in the lower time frame when you have a made new higher high or new swing highs or swing lows. Okay, so in terms of the chart, you can see when it made a new high, then it will create a low. Okay, it will create a low. Now the low was taken, then a new high was made here. Understand what I'm mentioning? When you have a new high like this, it will retrace like here, then it will take this low, then it will made a new high. So this we called as a liquidity. So the advanced market structure, when it made a new high, it created a liquidity like this. Okay, then the liquidity was taken here. After that, it made a new another swing high. So the advanced structure, the concept was created for creating a liquidity and attacking the liquidity. So what is why the liquidity was created? Why the liquidity need to be attacked? Because of the retail traders. Understand? So when we have when the other people learn this concept in SMC, they will wait for the order block here. They will wait for, they will put their order in this buy zone and they will put their stop losses below here. So here the institution made the liquidity like this and they will attack the liquidity and they hit their stop losses here and it will made a new high. So why this concept was made, the creating liquidity and attacking the liquidity, it is made for stop loss hunt for the retail traders. Because when all retail traders were their order was taken out, the institution came in to fill their orders. Understood? So this is a basic market structure and advanced market structure. Let me give you examples. So here I have tell you that you can see how the swing high was made here. Here we have made the swing highs. Understand that the green color was a swing high, the blue color was a swing low, and the simple was a liquidity. So when it made a new high, when it made a new high and the low and it broke a new high, it created liquidity. So it created liquidity and it attacked the liquidity, okay, and it made a new high and create a liquidity, attack the liquidity, and it made new high. Understand that? So the concept was before taking the highs, it will attack the liquidity to made a new high. Okay, so this will help you to understand the advanced market structure. Okay, how the price cycle was moved. The price cycle was moved to internal liquidity to external liquidity. So after taking external liquidity, where the price was moved the same like that to internal liquidity. So after taking the internal liquidity, where the price moved to the external liquidity. So always the price move with the concept of the liquidity to liquidity. Understand? The internal liquidity to external liquidity and the external liquidity to internal liquidity. So this is how the price move. You can see here the same like that. The price after taking the internal liquidity, it moved to external liquidity. So after price taking this internal liquidity, where the price move to the external liquidity. So after taking the external liquidity, where the price move to take internal liquidity. Understand that? So this is how the price was move in terms of the liquidity concept. Understand? So this is the another concept, and you can see when you have see the market only giving this a breakout, the high and the higher high. It means it is a fake move. It creating a liquidity here. It is farming the liquidity here, the sooner or later the liquidity going to be attacked and then it will give you a real move. So this is we called as a fake move when we don't have any liquidity, when we have only higher highs like this formation, right? So we called this is as a fake move. So what is a real move? So the real move is So this is the real move. The real move attack the liquidity here. So the real move attack the liquidity here, which is created by the fake move. Understand? So the fake move created a liquidity, the real move attacked the liquidity and made new higher highs. So this is about the market structure. Hope you understand this topic about the how the market structure was formed in the terms of SLK, or it is a basic term, not only SLK. It's a basic term how the market will be moved. So other than that, you need to understand about the breakout structure. What is a breakout structure? What is a sweep? You need to understand the topic. Okay. So, whenever you have a broken to the upside, what we called as a breakout, right? We called this one as a breakout. So what is a breakout structure means? The breakout structure called as, when you have a when you have a both direction breakout structure. The breakout structure to the downside and the breakout structure to the upside, we called as a breakout structure. Breakout to the downside and breakout to the upside. So when you have the both structure was breakout, so here we have broken to the downside, here we broken to the upside, we called this one as our breakout structure. And the simple terms, we called this one as we called as a sweep. The opposite direction as breakout. So the whole term we called as a breakout structure. Understand? So what is a breakout? A breakout is a one direction move. A breakout structure is a two direction move. It will break down to the opposite direction. Then after that it will break out to the upside. So we called as a sweep and breakout structure. So where the breakout was happened and where the breakout structure was happened, you need to understand this one too. So the breakout was happened on continuation trend. The breakout structure was happened on when the reverse was happened. You have the formation like we called as a bearish trend. Okay. So when we have a sweep and a breakout structure, when we have a sweep and breakout structure, so it means the price going to reverse, right? The trend going to change from the bearish to bullish. So the breakout structure in higher time frames, when it comes, the trend going to change. Okay. So now after taking this, the price started to move upside like this. So where the breakout was happened, the breakout was happened on the continuation trade. The breakout structure was happened on the reversal trade. Understand what I am mentioning here? So let me give you some examples. Here I have drawn here. Here you can see. So the breakout structure, when we have a sweep and we have a both direction breakout, right? The direction breakout to the downside, the direction breakout to the upside, we call this breakout structure. So the breakout structure always happened for the change in the direction. So what is the breakout? After the breakout structure happens, the breakout will lead into the continue the direction or continue the trend. Okay, so that we called as a breakout after the breakout structure. And what is a sweep? A sweep is, the big to weak, the opposite direction, big to weak. So you can see the previous candle week was taken by this week. So we call this a sweep. Okay. So here I mention you here, every sweep won't lead to breakout structure to change the direction. Whenever you have a sweep, it means it won't give you definition that it won't going to change the direction. But when you are seeing the sweep in higher time frame direction, it means it going to change the direction. Okay. So when you see higher time frame sweep and the breakout structure to the upside, it means the higher time frame trend going to change, right? So the sweep is big to wick, right? Stop loss hand we called as a sweep. Okay. So this called as a sweep. So what is let me sorry. So what is a breakout? So if we have a week to week, we don't call this a breakout. Okay, so this is not a valid breakout. This is a fake out. So what is a real breakout? When the candle body was taken by a body, we called as a breakout. And when the candle wick taken by a body, we called as a real breakout. So the body to body also a breakout, and the candle wick to body also a breakout. Understand the thing? So this is we called as what is a sweep and what is a breakout structure. Okay. So after that, you need to yeah, let me do in another one. Okay, another one is short video about this market structure.